Hey team, what's up guys? What's up girls, ladies, gentlemen? Well, let me, you know what, I did this again. This is like the 100th time I did this. I forget to untangle the microphone before I start, so just give me 2 seconds here. It happens every time. Alright, we'll just have to work with it. Alright, cool. Alright team, welcome back to Walks on Wall Street. It is Monday, April 17th, 2023. It is 8:48 p.m. and we are live. 59th Street, Columbus Circle, Central Park South. Big stuff. Windy night in Manhattan though. I think it's about 50 or maybe 61 degrees Fahrenheit, but it's a little bit windy, so it feels a little bit colder than that. I hope all of you had a fantastic start to your week, a fantastic Monday. Hope you all are keeping it optimistic and positive. So the agenda for tonight's live stream, everybody. Well, first off, I think we're going to walk all the way to 34th Street. If we're lucky, if we make, good timing and I don't get distracted by all the shenanigans going on in the city, I really want to take you guys into the Penn Station. Now, not to be confused with the Moynihan Train Hall, okay? Because we've been in there many times. I think you guys have seen it. But the old Penn Station, where I frequent oftentimes, right? I have to go back to Long Island. So you guys have seen the Moynihan train station. You've seen the new East Side Access Project, Grand Central Madison. But I don't think you guys have yet to see, or you've yet to see, the new remodeling, the new renovations that were done to the old Penn Station. Now, I've tried to take you guys down there before, but the internet is a little bit wonky. So we'll give it a try again. We might as well. We haven't done it in a while. But on the agenda in terms of topics, well, we heard from, well, let me just say this. We got some very key leading economic indicators. Okay, so if you've been watching Walks on Wall Street, if you've been a frequent viewer of the live streams, one of the things we really hammer on is building a systematic framework for investing, which starts with a top-down, bottom-up view of the market, and then we could whittle down to generating individual trade ideas for individual companies. But first, what we do is we like to look at leading economic indicators. And then one of the leading economic indicators we talk about all the time on the stream is the Institute of Supply Management, the PMI numbers, both the manufacturing numbers and the services numbers that come out, right? But also, we like to look for leading economic indicators and leading economic data in the housing market. Now, why is it appropriate and important, in my view, anyway, in my eyes, to look for leading economic indicators in the housing market? Well, if you think about the average American, okay, first generation millionaires in the United States, which means people who have a net worth of $1 million and they didn't inherit the money, okay? The vast majority of that net worth is made up in the home equity, right, in their homes. So we heard from the National Association of Home Builders today as it released their housing market index, or the HMI. And I think you guys would be surprised. Now, we've been talking about home builders almost to the point of ad nauseum because this specific sector has shown unbelievable strength on Wall Street. It's actually been one of the outperforming sectors in the market. If you think about stocks like Toll Brothers, if you think about, Taylor Morrison Homes, ticker symbol TMHC, which I think hit a new all-time record high today, home builders are outperforming at a time when interest rates are going up. So we'll talk about the National Association of Home Builders Housing Market Index For context here, everybody, if you want to follow along while we're talking about this, if you type HMI in the chat, once again, that is HMI in the chat, I programmed the Nightbot to drop the physical link to the National Association of Home Builders / Wells Fargo Housing Market Index, where you guys could look at all of the raw data yourself. Okay, and then you could use that to build your Excel models and the like. We're also going to be talking about Charles Schwab. Charles Schwab reported earnings today before the bell. Better than expected, actually beating Wall Street expectations. We'll go into the earnings report a little bit. Then we'll talk about Tesla. Yes, Elon Musk is at it again on Wednesday. After the bell, Tesla will be reporting corporate earnings. But I think you guys know what I'm going to say before it even comes out of my mouth. We're going to talk about the margin compression, not only in the auto OEM space, but specific to Tesla. I think that'll be a good conversation. And then lastly, we will talk about crude oil, commodities, and the big breaking news of the day, additional corporate layoffs in the management consulting sector. All right, without further ado, let's get started. I'm going to go ahead and close up my laptop, and we will head on out. I see Alfred is in the chat, Richard Vogel, Vonda Howard, good to see you. Brian, British Gray, Teresa Diaz, Dr. Longest, Big Task at Hand, Ebit Da is here, Jay Sully, ABX Girl, Austin City Limits, Gigi NYC, and many others. Thank you guys for joining so much. Let me just go ahead and close up my laptop. You know, I'll quickly tell you guys, so today was a pretty busy day for me. I actually went to Jersey City. So this is the first time in, I don't know, probably 2 years since I've taken the PATH train. Anybody here frequent the PATH train? Maybe you guys take it if you're, from Hoboken, New Jersey or Jersey City. So I had to go to a conference. I actually went to a real estate conference today, which I enjoyed. I think there was some really good speakers, very good conversation, and there was actually a lot of top performing real estate salespeople and brokers. So it was a really good networking opportunity. I think I learned a lot. I enjoyed it. But I got to tell you guys, and just real quick for some perspective here, for those of you who are just tuning in, this is 59th Street, Columbus Circle. Okay, the buildings you're looking at right now, these big two towers, this is actually the Deutsche Bank towers. Now, Deutsche Bank is a German bulge bracket investment bank. It trades under the ticker symbol DB. Now, Deutsche Bank actually used to have their main New York City headquarters down on Wall Street. I actually used to work right next door. That is completely empty, totally vacant, the building. Man, I got to get you guys down to Lower Manhattan. I think many of you who have joined the live stream has seen the empty Deutsche Bank old headquarters. But anyway, that'll be a topic for another day. Again, we are going to head down to 34th Street, Penn Station. Hopefully I can get you guys in the brand new renovated Penn Station. We'll see if the internet holds up. But what I was going to say is, I took the PATH train today, and there is such a stark difference, in my opinion, between the cleanliness and the efficiency. New Jersey Transit, does anybody know? Maybe we have some New Jersey people here, or maybe they're run by the same thing, the MTA. I actually don't know, but man, I don't know how they do it. So I entered at the 34th Street Herald Square entrance to get the PATH, right? I guess technically it's 32nd Street. On the southernmost side of Herald Square, I guess you could say. Man, the wind is really picking up. But the moment you walk into the PATH train entrance, it is so clean. I don't understand how they do it, and it's literally in the same vicinity. I'm seeing photos from around New York is here. It says Tom, Long Island Railroad is cleaner than the subway too. That's also true. Now, photos, I think you were here last night, right? When we were doing a quick walking tour of the brand new Grand Central Madison. Now that thing is really, really clean, spotless clean, but that's to be expected, right? I mean, it opened not only, a couple months ago, like 6-7 months ago, so hopefully that'll hold up. But you're right. I mean, look, and I get it. The New York City subway transports a lot more people than the New Jersey Transit and the PATH, but man, those are some really efficient trains. I was actually really impressed. Hey, Mr. Bagman is here. This is Tom. I'm from Jersey City and moved to Tampa, Florida 7 years back. We went back last year Very nice, and took the path a few times, and what a change. I love it. Yeah. So Mr. Bagman makes a really good point. Now, Jersey City, for those of you who are unfamiliar, you could talk about Jersey City, Hoboken, and I never traveled to Jersey, guys. You know me. I'm a New York guy. I like to stay in Manhattan. This is my zone here, okay? I very rarely go outside of my element, but during COVID, and I told this story a bunch of times, but we do have some new people here, okay? So during the COVID pandemic, we're walking down Broadway, by the way, just for some perspective here. And this building, I just really quickly want to point out, this is 220 Central Park South. This is one of the newest additions to New York City's Billionaires Row. And I think between the 51st and the 53rd floor, Citadel Securities' Ken Griffin owns all of those floors. So I can only imagine the amazing view of Central Park and 1 Central Park West and 15 Central Park West that we're looking at right now. 1 Central Park West is also known as the Trump International Hotel and Tower that we're looking at right now. But what I was going to say is, all of the COVID restrictions were a little bit wonky, right? Yeah, during the thick of the virus. So the vast majority of the shops, the coffee shops, the restaurants were actually closed down in New York, right? I'm talking about Manhattan. Now, you could go there if you wanted to take out, right? But if you wanted to sit down and, dine in, as they call it, you weren't allowed to do that. So a lot of young people, including myself, what we did on the weekends is we actually took the PATH train to Hoboken, New Jersey, because the rules were different, and it's pretty much, only a mile or two away. And that's really the only time I've been to Hoboken. And let me tell you, I was extremely, extremely impressed. Now, it is a little bit cheaper than living in Manhattan, right? We talked about, one of the big data points that came out yesterday. The median rent on the island of Manhattan now, I think, is over $4,500, if you can believe that. So the median rent on the island of Manhattan is $4,500. However, let's say if you move to Hoboken, New Jersey, chances are, if you live right on the water there, you're probably going to get a place below average rent in Manhattan, but you're going to get an amazing, amazing view of the New York City skyline. And I'm talking about Lower Manhattan specifically. For all of those New Jersey people that are watching the stream, I think you guys could back me up here, you guys and girls. The views from Hoboken and the views from Jersey City of One World Trade Center specifically is pretty unreal. I think it actually beats the views from Brooklyn. Serious. So again, I don't think I would personally ever live there, but as a little bit of a hack for maybe some of you that are thinking about moving to the New York metro area. If you want to be close to Manhattan, but you want to pay a little bit less in terms of the rent and you want to have a great view, I think you should look into Jersey City. Maybe you should look into Hoboken. All right, so everybody, we are going to probably turn down 7th Avenue. This is 432 Park Avenue, right in front of us here, as well as Carnegie Hall. I see Rich Child 9. It's a good thing you're in New York, Tom, because Miami, it's still raining. Oh, is it really still raining in Miami? I think it stopped on the day I left. Hey, Two Wheel Freedom. This is what's with illegal police stations for the Chinese government in Lower Manhattan. CBS broke the news earlier. I didn't hear about that. Well, that's not true. I did hear about that. I think they have like satellite, not technically police stations, but essentially just to keep tabs on Chinese citizens in the United States. Now, is there probably other espionage stuff going on, Two Wheel Freedom? Probably. There probably is, right? There's probably surveillance and, espionage going on for sure. It's funny you mentioned China. We actually spent the first part of the entire live stream last night talking about U.S.-China relations specifically. So I would just like to recommend once again, if you guys haven't read the cover story of Investors Business Daily this week, you have to read it. It is literally a prerequisite. It talks about semiconductor infrastructure, semiconductor fabricators. It talks about the raw materials that go into making these precious semiconductors, and it talks about a lot of the rare earths that go into making a lot of the EV batteries that we're going to need if we really want to meet the government's expectations of having over half of all the vehicles produced in the United States by 2030 be EVs. Now, speaking of electric vehicles, everybody, real quick, just for some perspective here, if you look all the way down 7th Avenue here, that's Times Square. Now, I think this is some sort of a new development. I'm not too sure what the building is, but it has kind of rainbow colors all up and down the side of the building. And I'm not too sure it fits with the whole vibe here. I think it sticks out a little bit too much. I don't know, but we'll talk about it. But, Tesla is reporting earnings on Wednesday. I think they're reporting after the bell. I think that is going to be absolutely critical to be on that earnings call. Now, if you want to be on the earnings call for free, all you have to do is go to Tesla's website, click on their investor relations page, and punch in your email address, and you will be sent the link to log into the earnings call. Now, here's what I'm interested in, and we're going to go a little bit deep into Tesla tonight on the live stream. I'll quickly give you guys another shot at Carnegie Hall here. But what I'm really looking for is an update on gross margins. And I'll tell you why. I'll quickly explain that, and then I'll get to reading some of the chats. I think we're actually going to turn down 6th Avenue. I don't think I have the mental fortitude to suffer Times Square for you guys tonight. I apologize. But if you think about, let's just talk about auto OEMs in general, okay? So think about the valuations of, let's say, a GM or a Ford or really any other auto OEM as it relates or compares to Tesla. Now, I know what you're thinking. It's pretty obvious, right? Once again, real quick, this is 157. There's a really unique art gallery here. Get Street's Art Gallery at 157. Looks really beautiful. Now, again, the Park Hyatt is on this side, and then the residences are right behind me. Hey, Daryl is here from Chicago. Good to see you, Daryl. Hope the weather's good over there in Chicago. Thank you for joining. Now, what I was going to say is, a lot of the analysts on Wall Street that cover Tesla in particular that have been very, very bullish on the stock from the beginning, and even some very notable portfolio managers, right? If you think about Ron Barron, I think the biggest Tesla bull that has made the most money in Tesla stock, that comes to my mind. I mean, you guys could definitely put some names in the chat, but to me, it's probably Ron Barron of the Barron funds. I mean, I think they made multiple billions of dollars in Tesla. And their main thesis is, look at the gross margins of a Tesla vehicle or an EV that's produced by Tesla as opposed to any other vehicle produced by GM, Ford, or any of the other auto OEMs. You can't even compare it. So at its peak, I think Tesla had about 30% margins. That's fantastic, guys. That is ridiculous, okay? 30% margins. So the theory there is, if Elon Musk and Tesla can crank up building, all of their gigafactories and their factories, I think one of them is now in production in China now, actually. We're probably going to get an update on that on Wednesday. But if you can increase production and maintain the same sales volume and the demand for your product is still high, at 30% gross margins, the company is going to print money. Now, as inflation has been really, really hitting not only the United States, but the entire world, I think a lot of companies are going to suffer from margin compression and margin erosion. And we've been talking about this pretty much over the last year. And that's exactly what's happening to Tesla. Now, if you look at a lot of the whisper numbers on Wall Street, I believe they're expecting earnings to decline about 19% this quarter, with margins eroding, I think, down to 21% from 29%. Now, you would think, wow, 21% gross margins, if you think about, GM or Ford, you're lucky to get, single-digit margins maybe, right? So those gross margins are still good, but, I think the reason why we've seen a lot of the frothiness come out of Tesla stock is because those gross margins have really been coming down here quite significantly. And that is pretty much the main bull thesis as to why, according to a lot of the analysts that cover the stock, as to why Tesla demands this premium valuation, right? Why should Tesla trade at a premium to Ford or GM, right? Now, there's a ton of reasons we could go back and forth, but the main argument or the main thesis really has been the gross margins. So we'll take a look at that on Wednesday. Justin S. says, Tom, Tesla still has a problem with quality control. They have to ramp up, but still improve the quality of the build of their products. Now, Justin S. makes a good point, and I actually have a question for you guys. I do have a quick question for everybody in the chat. Hopefully we have some Tesla owners in the chat. Maybe we do, maybe we don't. But I use Twitter a lot, probably too much. I probably use Twitter too much than I really should. But it's a great place to do equity research. It's a great place to do, essentially feet on the street research. And there's a lot of complaints about the build quality of Teslas. So maybe could anybody put in their 2 cents in the chat? Maybe if somebody has owned a Tesla in the past or owned them right now, is the build quality really that bad? Does the paint, wear and tear within the first year? And I also saw multiple posts in relation to the steering wheels, like literally just falling apart on the Teslas, which is a big concern. So is that duly noted, or is that, or I should say this, is that consensus? Would we say that's consensus? Will says, Tom, there's panel gaps as well. All right, so Will says there's a lot of panel gaps there. Hey, Otto is here. Says, hey, everybody, and Tom, good to see you. Music says, Tesla's success can be attributed to its focus on innovation, production efficiency, economies of scale. Tesla vertically integrated business model also allows Tesla to control costs and improve margin. Yeah, now that's a really good comment, and I actually want to ask you a question back to your comment. And I want to make a quick analogy here, everybody, to Apple stock. Now, it'll make sense in just a moment. I'll sort of explain my position. But for a long time, everybody, I would even say, I was watching CNBC. I was really getting involved in the markets, when I was a senior in high school, right, 2014. And many analysts on Wall Street were assigning valuations to Apple as a hardware business. And I remember there was some notable analysts on Wall Street, specifically Tom Lee of Fundstrat. We're looking at 432 Park Avenue, by the way, coming out and saying, hey, Apple shouldn't have a valuation as strictly a hardware business, because if you look at their product pipeline, if you look at all the research and development, if you look at the vision that Tim Cook has and the team at Apple, it's really a software company, and it should be valued as such. So to your point, do you think Tesla is also commanding that premium valuation not only because of the higher than average gross margins, but because they're valuating it as pretty much like a big data company or a software business? Could be. I mean, if you think about autonomous driving and the data collection that Tesla has over GM, over Ford, over Toyota, over Kia, it's impossible for those companies to catch up to Tesla as it relates for just all of the data that Tesla has collected over the years to really build out their fully autonomous driving. So we'll see about that. Atlas is here, says, when I was in my freshman year of college, always wanted a Tesla. Now I'm in my final year of college, and I think that's no longer the case. I saw this green Mazda one day and fell in love. Wow. Okay. Yeah, I mean, Atlas, a lot of, if you talk to probably anybody under the age of 35, I would probably assume that the vast majority of those individuals, if they're in the market for getting a vehicle, Probably would choose Tesla. Probably would choose Tesla. All right, let me catch up on some of the comments here. Peter Webley says overwhelming majority of Americans don't use Twitter, and that's why I think there's a lot of alpha there. Will says, noticed this week that Rivian is trading below net assets per share. Is this company a buy just because it's so cheap? Well, Rivian I don't think is profitable. So I personally wouldn't buy Rivian. I mean, again, if you think about, the reason why I really wouldn't buy Rivian is there's just too much competition. And you're now having every single auto OEM everywhere dumping billions of dollars into research and development to manufacture EVs. So I think the market is going to get severely crowded. And I think that Tesla is going to act as the Apple of the EV market, and I think it's going to be very hard to compete with Tesla, right? I think you'll have Tesla and then you'll have everybody else, in my view. Maybe I'm wrong. But guys, hold on. I want to pull off to the side here because I want to show you guys something, okay? And then I'm going to catch up on the comments. I know I've been reading some of the comments. I still have my briefcase with me today. But guys, check this out. This building right here that you're looking at is called 53 West 53. Now, I know what you're thinking. You're like, Tom, this isn't Billionaires Row. What are you showing me? Well, it kind of is, okay? Even though we're on 53rd Street and it's not 57th Street, it's still technically Billionaires Row. Okay, this building is one of the newer additions to New York City's Billionaires Row. It also has a nickname of the MoMA building because MoMA, the Museum of Art, very famous art museum, is actually right next door. So if we continue to walk down just a few more steps, you'll actually be able to see it.
Is this referral from someone and they're probably like...
Let's see if we can cross here. Because sometimes you can see into the MoMA courtyard, but this building is stunning. I'm not sure how far you could see into the lobby, but it is a really stunning building here. Hey, hang with Mark Mom, what's up? It says, good evening, Tom and chat. My son is your age. Tom and Nope, he used to want a Tesla, but decided for a GMC Terrain. Wow. Now he's looking at Toyota Limited. That's interesting. So we have two data points of young millennials or Gen Zers wanting a Tesla, but then they've shifted course and actually purchased other vehicles. Now, quick question, not to get too political, but I gotta ask the question. Do you think that shift has anything to do with Elon Musk being so, I'm going to use the term flamboyant and outspoken about politics, about free speech, about hate speech, and the acquisition of Twitter, and also acting a little bit trolly, right? I mean, I think Elon Musk is a great guy. I support Elon Musk. I think he's doing great things with Twitter, but here's the but, okay? Elon Musk upsets a lot of people. It's true. He gets under a lot of people's skin, and I think he's a very unique character in the fact that he's not like the average CEO, right? You don't see Jamie Dimon going on Twitter and picking a fight with Alexandria Ocasio-Cortez, right? But maybe that's what makes Elon Musk unique. Maybe that's what makes people like him so much. But on the other hand, you're also going to have a lot of people that are going to be turned off by that. So do you think Elon Musk getting involved in Twitter, Elon Musk getting involved in the conversation about free speech is actually turning some customers off and turning them on other products? Would we agree with that or disagree with that? I don't know. I mean, I would say maybe. Hey, Ken Brockton, what's up, man? Says he's endearing himself to a base that doesn't buy electric cars. Music says, I think Elon picked up the ball where Trump left off on the field and is making similar plays how Trump tweeted with all of his controversies. Maybe I do see some similarities there, sort of like poking the bear a little bit. I think that's an appropriate statement for sure. Richard Vogel says you agree. Mimi is here. Good to see you. Hey, San Miguel. Indeed, it has been a long time. It's good to see you. Zay Batata says more like not wanting to drive the exact same car as every yuppie normie. Maybe. Perhaps. I'm trying to get to as many comments as possible. Hey, Dan Zhang says, Tom, I was so disappointed that the Starship test launch was canceled this morning. Dan, why was it canceled? I saw Elon Musk tweeting about that. Was it canceled due to poor weather? I haven't really been following it because I was too preoccupied with some of the housing data that came out, which we'll talk about in a moment. But it's good, it's good to have this conversation about Tesla. Once again, everybody, Tesla will be reporting earnings Wednesday after the bell, and I think those gross margins are going to be front and center on the earnings report. Two Wheel Freedom says, what about the Cybertruck? It seems like it's never coming out. Well, I think they said it's going to be late 2024, right? I mean, I can't wait until I see a Cybertruck on the streets of New York City. That's going to be insanity. The Dope Dealer 718 says, I like him because he disrupts the market multiple times. I mean, he's definitely a disruptor. I mean, Elon Musk, we can't deny that he's done amazing work for the planet, right? I think it's fair to say, and I think, people on both sides of the aisle would agree, that Elon Musk single-handedly kicked off this EV revolution, right? I mean, Ford was not a leader in EVs. GM was certainly not a leader in EVs. It was really Tesla. And since Tesla made such a huge splash and had a huge first mover advantage, all of the other auto OEMs started to play catch up. Right now, I think a lot of politicians don't give Elon Musk the credit he deserves in terms of, being a pioneer in EVs, because, it's a non-union shop, right? If you're a government official, both a Democrat and Republican, you're going to praise the good old Ford, the good old GM, stereotypical, blue-collar America, and you're not going to praise, someone like Elon Musk. So I think that is a little bit unfair. But then again, politicians always pander and play to their base, right? I mean, I think they want to just get reelected. All right. Atlas says, what do you guys think of Ford EVs? Some of them look good. Well, and I always pronounce this wrong, and you guys always correct me. Real quick, this is UBS. UBS actually just recently acquired Credit Suisse. So this is the Swiss bank that is now pretty much a monopoly in Switzerland. But I think Ford has now come out with a new EV called the Mach, right? I think I would always mispronounce it and say Mach-E, but I think it's pronounced Mach or something like that. And I actually do like the style of those cars. Now again, you guys know I don't drive, right? I know how to drive, but I don't own a vehicle. But I think if I had to, it would still probably be a Tesla. But I don't know. I think just the style of the EVs look a little bit better with Tesla. Yeah, Richard Vogel says that's awesome. Yeah, the Ford is doing a good job. I mean, I got to give them credit where credit's due. Billy Johnson says it's the Ford EV Mustang. Hey, I see Melanie is here. Good to see you. Says Tom, I would say Tesla as a company is more innovative than Elon Musk himself. He's not an engineer of any kind. Wow, that's a big statement. Now, I'm not sure if I agree with you, but I respect the opinion. I respect it. Look, Elon Musk is a controversial guy. A lot of people have different opinions and topics, a lot of different takes on him. That's an interesting take. I do see your point, though, right? At a certain point, I see Melanie's comment reminds me of a Richard Branson interview that I recently watched. And I'd like to quickly tell you guys about it because I think it's really important. But But real quick, this is Radio City Music Hall. We are now standing directly outside of Radio City, as well as Rockefeller Center. We don't have time to go to Rockefeller Center today because we have to head down to 34th Street. But I want to talk about housing, but I got to tell you guys about this Richard Branson interview that I just recently watched that was recommended to me on YouTube. Now, to Melanie's comment, she says, I think, the more along the lines of the innovation is coming from Tesla as a company, all of the employees, all the different people in Tesla, as opposed to just giving all the credit to Elon Musk. Okay, we don't have to agree on that. I think it's a good comment. But Richard Branson said something very interesting. He said, if you want to grow a successful company, and you want to grow the best company in the world, you don't need to be the smartest guy in the world. All you need to do is create an environment and hire the best and most talented people in the world to come work for you to build the product. And you need to let the leash off and you need to let the dogs run, right? So if you can create a space and raise the money, right? Richard Branson's a very, very rich guy. You could essentially pay for talent, the best talent from all over the world, have them congregate at your company and your business, and give them full autonomy to build your vision, right? If you're the visionary, right, like Richard Branson is, oftentimes he even admits he's not really the engineer behind all of the innovation. What he has is his grand vision, right? He has the big picture idea, and what he does is he works tirelessly to search the entire world to hire and find the best people to execute his vision. And then he pays them very, very handsomely. So maybe that's what Elon Musk is doing. I'm assuming, if you work at Tesla, you must be, these are the smartest people in the world, right? So it's a good point. It made me think of that interview. All right, I'll give you guys a quick look at the fountain and then we will head down. Hey, hang with Mark Mom. Says I was a self-taught coder, much like my son, who knows over 8 coding programs. Wow. He is in his right as a genius software engineer. Now, I love hearing stories like that, hang with Mark Mom. And I'll tell you why, because, I know a lot of talented software engineers that are my friends that I've met in New York, over the course of being here. And there's a good handful of them. I wouldn't say the majority, but there is a handful of very, very talented software engineers out there that are self-taught. They've sat down and taught themselves how to code in Python, C++, C#, Node. So I think, one of the interesting things about technology and software engineering in and of itself, if you work hard and you teach yourself all of these skills, right? Oftentimes here on the Walks on Wall Street channel, we'll talk about how important it is to build a fundamental talent stack, right? You want to continuously acquire skills in perpetuity forever. And one of the easiest things you could do if you have the mental fortitude and the drive to do it is teach yourself a programming language, right? And then when you start to save up some money, you could actually pay for, an 8-week coding boot camp where you get a certificate where you could take that and apply to some pretty big companies, right? Google, Facebook, which is now Meta. There's a lot of opportunity out there, and you don't necessarily have to have the 4-year college degree. You could be an autodidact and teach yourself all of these different skills, build your talent stack, save up some money, go to a coding boot camp, and get a pretty good paying job. It's a good point. Hey, Bree Grams, what's up? Good to see you, Bree. Welcome. Vivian is here, welcome. Hey, Music Man, says Tom, I am self-taught and have built systems all you guys have used without a team for big companies. That is awesome, man. You're living proof that it can be done. I love hearing those stories. It's fantastic. Congratulations on your success. Galvo says, say hello to Brazil. Good to see Brazil. All right. Hey, Mike Skate TV says, hey, Tom, good to see you, buddy. Good to see you, Mike. Long time no see, by the way. Thank you for joining in as we walk past the News Corporation building, which is home to Fox News. Now, guys, tomorrow, I think it's 7:30 a.m. If you want to tune into Fox Business, Kirsten Jordan of the Kirsten Jordan team, if you've ever watched the television show $1 Million Listing New York, she's going to be giving a little bit of an update on the New York City housing market. She'll be on with, I believe, Neil Cavuto at 7:30 a.m. if you want to tune into that. I've been doing some work with the Kirsten Jordan team at Douglas Elliman. They're one of the top producing real estate sales teams in New York City. And she's an incredibly, incredibly talented and smart woman. One of the greatest salespeople I've ever met. So be sure to tune in at 7:30 tomorrow. She'll be giving an update on that. All right, let me just, I got to zip up my jacket. I pulled off to the side. I got to zip up my jacket because the wind is blowing. Check this out. If you look at the flags up there, it's probably like 15-mile-an-hour winds. Anyway, but team, let's get right into the main topic for tonight, okay? I actually probably should have brought my hat tonight. It's kind of windy. Anyway, all right, so guys, we got a very important piece of leading economic data as it relates to the housing market. So we heard from the National Association of Home Builders. Today they released their Housing Market Index, or the HMI, for April. And the index actually increased 1 point to a 45 reading. Now, if you remember back this time last month, real quick, this is West 47th Street. This is actually the Diamond District. This is a very, very famous street here in New York City. This is New York City's Diamond District. So if you've ever seen any of those, you know, there's a lot of YouTube channels now that showcase some pretty interesting and cool, you know, jewelry sales right here in the Diamond District. This is where it all goes down, right here. We're walking past it now. Anyway, if you think about last month's reading, okay, we had about a 44 reading, and the indice is scored on a scale of 0 to 100, with a reading of 50 or below signaling pessimism in the home builders, I should say new home sales market in general. So if you type !HMI in the chat, I actually programmed the Nightbot to drop the National Association of Home Builders Housing Market Index. And the reason why I did that is because in order to continue this conversation, you got to look at the visual, okay? It is so important, especially for a person like me who's not that smart. I'm a visual learner. I need to see the data physically, right? And this is why it's so important to build these models in Excel. So once again, if you type !HMI, you'll be able to see the chart of the Housing Market Index going back 2 years. Now, take a look at the chart. It's about a quarter of the way down on the page, and you'll see that we actually put in a bottom in December. So the December reading, I believe, was around 31. It may have been 30 or 31. You guys could feel free to correct me in the chat. But for 3 months in a row now, the Housing Market Index has actually been turning up and going positive. So December, we had a reading of 31. January, we had a reading of 35. February, we had a reading of 42. March, a reading of 44. And now in April, we have a reading of 45. And I'd like to give some context here. So if you remember when we talk about the Institute for Supply Management, PMI numbers, we're about to see an amazing view of the Empire State Building here. I always say, when you're looking at the Institute for Supply Management PMI numbers, what's more important is the trajectory of those numbers, right? Are the PMIs in decline? Or are the PMIs accelerating? Because many people interpret these reports in the incorrect way. And many, seasoned analysts on Wall Street do the same thing. They interpret it the incorrect way. But you want to look at the trajectory, right? We want to use these as leading economic indicators. So many people would say, okay, if it's a reading below 50, that means things are no good and, all hell is going to break loose and it's Armageddon. We're now looking at One Vanderbilt, beautifully lit up in the crisp blue color. And other people would say, okay, if the reading is above 50, that means everything is good, everything is great, all systems go. But again, if you've been watching Walks on Wall Street, it's not just the reading, it's the trajectory of those numbers. So are we going from, say, 30 to 50, from 50 to 60, or are we going from 70 all the way down to 40? So as you see these numbers visually, and if you want to build these models in Excel yourself, you'll actually be able to see the business cycle in real time, which will allow you to position your portfolio in the appropriate way to anticipate these major moves in the market. So if you want to understand how the housing market index is broken down, essentially they send out a survey to many respondents, and they ask them what the sales activity is looking like in the present month and ask them to give a forecast 6 months out, right? So again, if you have many home builders that are a part of the National Association of Home Builders giving positive reviews or positive sentiment about the housing market in terms of sales for new homes in the present and 6 months out, well, we can use that as a pretty good leading economic indicator to say, well, maybe things will be all right. And if you look at the individual stocks, which we're going to talk about in a second, they actually back up the data. But before we do that, look at this. This is an unbelievable shot of the Empire State Building. I think this is probably the best shot we've ever gotten of the Empire State Building in probably the last 4 months. Raw Green Tea says, hey Tom, love your new unique channel here. New York City has lost countless middle-aged and older high earners. The rental market in New York City is supported primarily by 20s and 30 singles. New York City is great young. Yeah, I mean, you make a good point. New York has unfortunately lost a lot of high income earners, that is true. But even after all of that, I think New York City is the city that still has the highest concentration of billionaires. Now, could we confirm that? Could anybody just do a quick Google search? I think that would be really interesting to find out on the stream. Is New York City still the highest concentration of billionaires in New York? I mean, in the United States? I think so. Hey, Carol H says, hey Tom, eating dinner and enjoying your stream. Carol, thank you so much for joining us. Always a pleasure to see you. We're actually going to head down to Herald Square, your old stomping grounds, in a moment. But thank you for joining us. Hey, MBA Elias is here. Good to see you. MBA Elias, what did you think of Charles Schwab today? Charles Schwab reported earnings actually better than expected. We'll talk about that in a moment. Now, Charles Schwab was really getting me a little bit nervous there, and I think many other people a little bit nervous over the course of the past 2 weeks, especially after the massive fallout with Silicon Valley Bank. Now, it's interesting because JP Morgan Chase reported earnings last week before the weekend, really kicked off earnings season, and Jamie Dimon's company had an absolute gangbusters blowout quarter. Record profits for JP Morgan Chase, which honestly, guys, it was a little bit, you could kind of expect that, right? Because I think, unfortunately, what we're going to have, and we briefly talked about this on last night's live stream, you're probably going to have a big consolidation here into the major 4 banks. You know, Silicon Valley Bank that went under was the 19th largest bank in the United States. And that's going to send a message to a lot of Americans and to a lot of foreigners that bank with US banks that, you know what, I don't want to take the risk anymore of banking with a regional bank. I don't want to take the risk with banking with a local institution when I could just give my money to Jamie Dimon or Brian Moynihan, which actually is right in this tower, the Bank of America tower right here. The CEO of Bank of America, I think they're up to report earnings tomorrow, I think, or maybe Thursday, at these too big to fail banks. So I think you're going to see that trend continue to accelerate of money shifting from these smaller regional banks, credit unions, local banks, and unfortunately it's probably all going to go to Jamie Dimon at JP Morgan Chase. It's probably all going to go to Brian Moynihan at Bank of America, and I think that trend is going to continue. Hey, MBA Elias is for the 4th straight month. Builder confidence has increased due to lack of resales inventory despite elevated interest rates. Yeah, you're spot on. You're spot on. We just talked about that. You're absolutely right. The National Association of Home Builders released the Housing Market Index today, and it's actually performing really well. Home builders are very optimistic on the market, and I think that is, I would say it's supported by a lot of the price action in a lot of these home builder stocks. We'll cross the street. I'll see if I can get you guys in Bryant Park before it closes, before they kick us out of here. But we'll quickly cover that before we move on. MBA Elias brings up a great point. Now, I'm going to read off a list of home builder stocks, and I know the vast majority of you understand this already, but there's a select few people that can't handle having an adult conversation, and they think anytime I speak about a specific stock, they flip out and they send me emails like, oh my God, your hedge fund is long this stock and you're talking about it, or your hedge fund is short this stock and you're talking about it. It's just, guys, it's all nonsense. It's not real, okay? So look at Toll Brothers, check out KB Home, and check out Taylor Morrison Home. And what do you notice about all 4 of those stocks? Well, they're all trading near 52-week highs and near all-time record highs. Now, I'm not saying to go out and buy these stocks. I'm not saying look into these stocks and purchase them or short them. The reason why I'm bringing them up is because oftentimes we could use the stock market in and of itself as a leading indicator to give us clues as to the directional bias of the specific sector. So if you think about different sectors in the S&P 500, you talk about consumer staples, you talk about consumer discretionary, you talk about enterprise software, home builders, right? One of the industry sectors that are really leading this market is surprisingly home builders. And if you whittle down and you look at the individual stocks, many of them are trading near all-time record highs, which I think, and you guys can keep me honest here as we're looking at the beautiful fountain here at Bryant Park, I think Taylor Morrison Home, ticker symbol TMHC, hit a brand new all-time record high today, blasting past $38 a share, and that coincides with the leading economic indicator and the economic data we got today, which is the National Association of Home Builders Housing Market Survey, or I should say the Housing Market Index, which seems to be bottoming. So things are looking on the up and up. We'll continue to monitor it. But really quick, I wanted to give you guys an up-close and personal look at the lawn here at Bryant Park. Now, this just opened all but a couple weeks ago. And look at how clear, and look at how, I guess you could say, healthy the grass looks. This looks fantastic. Now, I'm not sure if they're letting any people on the grass yet, or maybe it's only during certain hours, but I think it looks pretty good. I think it looks pretty good. Hey, Tug Carter, what's up? Says, look, the ice melted on the grass. Yeah, this all used to be the Winter Village at Bryant Park. It's kind of funny. Hey, Ninja is here. Says, hey bro, Ninja here. Good to see you. Thanks for joining us. Lewis is here from Brazil. Good to see you, Lewis. Pity Nifty says, better slap on a COVID era protection for guarantors just to be safe. Little Larry Sellers, Silicon Valley makes sense to have the most billionaires. San Francisco is very expensive. I don't know. I still think it's New York. I'll look through the comments. Maybe you guys actually put the answer in the comments. I was too busy yapping away. Hey, 45 says, Tom, how do we know what a billionaire's main residing city is when they tend to own multiple properties in different cities? I think it comes down to their primary residence, does it not? PJL says New York City has 81 billionaires. Wow. Yeah, I mean, even after all the crazy political nonsense that's going on in New York, I still think, and again, I could be wrong, it could be different, but I think the most billionaires in the United States still reside in New York, I think. But 81 billionaires in New York, wow. Look, I mean, at the end of the day, guys, people want to be here, right? And if you think about, like, just think about if you were a billionaire. Maybe there's some billionaires watching the live stream. You never know. You have Billionaires Row on 57th Street. We talk about it every day. You have 157 Central Park Tower. You have 432 Park Avenue. You have 220 Central Park South. You have 53 West 53rd Street that we just walked past. These are the creme de la creme, cream of the crop, best in class properties on the planet. Not in the United States, but on the face of the earth. These are the best properties. This is the premium. It's right here in New York. Okay, so if you're a billionaire, you want to own one of those trophy apartments. You want to own that Mona Lisa in the sky. That has your name on it. That's your mindset, okay? So I'm bullish on New York long term. I think, you know, this is going to continue to be the billionaire's playground in my view. We'll see. Yeah, John Sorley says the interview with Elon Musk was great. You know, John, we've been talking a lot about Elon Musk tonight, and I think we should continue it a little bit because that was a ridiculous, crazy interview with the BBC. Was it with the BBC? Or am I getting that wrong? I'm trying to think. Yeah, it was with the BBC. Maybe you guys could help me out in the chat. Was the ridiculous interview with Elon Musk, was that with the BBC? I think it was, right? Okay, it was with the BBC. Sabrina Fair says it was with the BBC. Yeah, I mean, you know, and it was a little bit disheartening, honestly, to watch the interview. And I'll tell you guys why. And I want to know your take on that interview because I happen to have a lot of respect for journalists. I think especially independent media, independent journalists do a lot of good work. But it seems like the Fox Newses of the world, the BBCs, the CNNs, have almost morphed into this dystopian, corrupted style media where you know that if you're reading anything or watching a publication from these outlets, you are reading a narrative. You are part of a narrative. So for those of you who haven't seen the interview with Elon Musk and the BBC, the gentleman, the reporter, claims that he has seen an uptick in violence, in hate speech, in racism on his personal Twitter page. Right now, I'm not saying he's lying, right? Maybe he's not lying, and I think that's something to be taken very seriously. And I think Elon Musk and the people at Twitter do take it seriously because they own the platform, right? If I own Twitter, I wouldn't want any racist comments or any, hate speech or violence being on my platform. I would take that very seriously. So Elon Musk sort of got a little bit standoffish with the guy and said, wait. If you're seeing an uptick in racist comments and hate speech, give me an example, because he probably wanted to address it and fix it, but the guy couldn't even give him one example, not even one, right? Not even just a general statement, right? And the reason why I think that's so dangerous, right? Because if you're a journalist and you are interviewing the wealthiest man on earth about a platform that really decides sometimes political elections, I think it's really bad to lie about something like that, right? So if you make a claim and you can't come prepared to the interview with at least a couple examples to say, I've been on Twitter for, X amount of, hours since you've taken over, and here are the examples of the increase in hate speech on your platform. What are you going to do to address this? I think that would be appropriate. But all he did is he just made some outlandish claim with no concrete facts to back it up. And I think with such a sensitive subject like this, I think that sends a really bad message about journalism. And it sends a signal to the populace and the public, can we trust these guys? Can we trust these girls? And I think that is important to have the populace be able to trust the media. But when you have a breakdown like that in public, people are going to start to second guess the media. People are going to start to say, oh, you watch Fox News, that's fake news. You watch CNN, that's all fake, right? And I think the reason why people are saying that increasingly now is because if you watch Fox News, you're getting all, Republican talking points. If you watch CNN, you're getting all CNN talking points. And Democrat talking points. You're not getting the news. I think people just want to get the news and make decisions for themselves. Maybe that's just me, but I don't know. What do you guys think in the chat? Would you rather just have a news publication where they could just give you the news and you make your own decisions without getting spun a narrative? I think that's what I would want. But again, I don't want to speak for anybody else. But it seems like every time I just can't even watch Fox News anymore. I can't even watch CNN. I honestly can't even do it just because it is just you're watching propaganda. You are actually watching propaganda. Hawaii says yes. Stacy says 100% yes. Ken Brockton says problem is giving people the news they want is not profitable. Ken makes a good point too. Ken Brockton, that's a good point. I think Ken is sort of talking about the follow the money principle. And I think we've reviewed that multiple times, right? The follow the money principle. And unfortunately, to Ken's point, and he's 100% correct, I think he just summed up this whole subject better than I could. But at the end of the day, oh wow, look at this. That's a nice shot of the Empire State Building. At the end of the day, the media needs to sell advertising, right, and drive revenue. And in order to command those very expensive advertising dollars, you need to be able to draw eyeballs. And unfortunately, what draws eyeballs are drama, fighting, getting people to argue and bicker with one another, because that's unfortunately what people want. So it's a good point. They are a for-profit business, so maybe they're just trying to spin that narrative just to get people upset so they could drive advertising dollars. It's a really good point. Justin S. says the loudmouths on both sides are the ones that attract the most clicks. It's very, very good. Hey, Finding Ian says, Tom, it's my birthday watching from Kenya. Hey, happy birthday, man. Wow, all the way from Kenya. We appreciate you watching. Thanks so much. Happy birthday to you. Rich Child 9 says, Tom, I don't watch the mainstream media anymore. Eric says, so greed is to blame for America's dysfunctions. Says Eric, but maybe some of it. Maybe some of it. Yeah, TC says the media is the new version of Jerry Springer. Hilarious. I don't know. Let me scroll through some more of these comments here. We got Taylor Swift playing in the back. Hey, Munsar says, Tom, how's better in the future? I think you're gonna have to retype that comment. I think it was spelled wrong or something. Angie says, Tom, independent journalism is the future of transparency, but you have to teach our government about the First Amendment. Yeah. Oh, Charlie says, yes, it was the BBC. I think we could all summarize this, everybody, just by saying, look, I wish the media would just give us the news and let us make our own decisions. But I think the problem is the media is crafting the narratives now. Anyway, good topic. Here's another really good view of the Empire State Building. We are now 34th Street, Herald Square. We're about to see the Macy's. And then we're gonna make a right, and hopefully I can get you guys into the brand new Penn Station. Hopefully the stream health will hold up. But look, I think we're having a lot of good conversation here. If you guys are enjoying the conversations we're having tonight and enjoying the live stream, you could feel free to leave a like on the video and click the subscribe button if you're new. We do these live streams about 5 days per week between New York City and Miami, talking about the financial markets. So feel free to join us pretty much every night at 8:30 p.m. So check this out, 34th Street, Herald Square. This is the very famous Macy's. Now I think the Macy's Flower Show is officially wound down. Looks like they're taking down all of the decorations from the flower show. And Herald Square is pretty empty, look at this. I don't know if they have any plans to put anything here, but it looks pretty empty. Hey Atlas, this is Tom. I have plans to visit Tokyo next year, and it got me thinking, would you consider doing streams in another country? You know, maybe. It depends on if I'm there. Also, you know, a lot of other countries I don't think would be as open about doing a stream in public as the United States. You know, in some countries, you know, people really flip out if you're filming in public. That's one of the reasons why, if you guys notice, I try to stay away from people while I'm doing the live stream. I don't really like to interact with anybody while I'm doing it. I just sort of like to give you guys some good views of the city, have conversations with people in the chat, and just kind of avoid people on the street, because you never know. I mean, some people aren't comfortable, you know, being filmed. Some people flip out, and I want to stay as far away from these people as possible. Hey, Nina is here. Thank you, Nina. Appreciate it. Dan Zanks, so trust me, Tom, in Asia, that's all we do. Live streamers are everywhere. For some reason, I thought it was the opposite. Like, people wouldn't like it, so. Rich Child 9, I appreciate that. MBA Elias says, just watch independent media and good videos like Everything You Need to Know About Finance and Investing, like Bill Ackman. Yes, that is one of my favorite videos of all time. I think it's actually one of the Nightbot commands that we have, I think. All right, let's get back on track here. I'm gonna get all distracted. I gotta get you guys down to Penn Station. So we'll continue to walk down there. But I gotta ask you guys a question. Okay, so we talked about Tesla's earnings that's coming up on Wednesday. We talked about the housing market in terms of new home builders, right? We talked about the home builders where sentiment is increasing and the outlook for sales are actually increasing. Also, the last piece of the puzzle that is that is inclusive of the National Association of Home Builders Housing Market Index is actually the traffic of prospective buyers. So the survey captures the interest of buyers that are walking through the showrooms, and that has actually increased over the last 3 months, all while interest rates are still relatively high. I think the average 30-year fixed rate mortgage, according to CNBC, as of today is, what is it, 3.813%? Something like that? No, it's higher than that. Does anybody know what the average 30-year fixed rate mortgage is right now? I think it's 6.8, not 3 point. I'm talking about the 30-year treasury. The 30-year fixed rate mortgage must be 6.8, right? I think I'm getting that confused with the 30-year treasury. But yeah, just under 7%, so we'll see. But did anybody hear the news today? It was breaking headline on Reuters. Let me actually cross here while we have an empty street and a beautiful view of the Empire State Building. Hey, running at altitude says, yeah, it's 6.61%. Thank you so much for that. Appreciate it. Now, there was a big headline on Reuters that sort of gave the news that we were talking about a week ago, right? So it's almost like here on the Walks on Wall Street stream, all of the chatters and the viewers, we've already predicted this. And what I mean is we were talking about the CPI number, right, that came out. So the Consumer Price Index came out last week, and inflation was up 5% year over year. Now, energy costs were down significantly, and fuel oil was down significantly. But as we've explained, that data is outdated already. And the reason for that is because at the end of March, you had this really, really big and drastic waterfall sell-off in the price of crude oil. And then you had this really big snapback rally in crude. And I think as of recording this video, crude oil is trading at what, $85? Maybe 86 bucks, something like that. And that means the price of gasoline or the price of fuel at the pump is going to increase. It is only a matter of time. If crude oil is going up, well, the prices at the pump are going to follow. So the average cost of a gallon of gasoline is up 21 cents month over month. That is a huge move. Now, I think this will be fun. Does anybody want to take a guess? And this is in the United States, by the way. Does anybody want to take a guess at what the national average price per gallon of gasoline is in the US? Let's see if anybody gets this right. I think you guys probably will get pretty close. But the average price of a gallon of gasoline in the United States right now. This is important to talk about because we're going to go into talking about commodities in a moment. Using People says 365. Yeah, Dusty Cole hit it right on the head at 367. Wow. Yeah, 350. I'm seeing a lot of 390. Elizabeth says 390. But Dr. Longus hit the nail on the head. $3.67 as we're looking at the entrance to the Long Island Railroad. And you see that very iconic Empire State Building there. Now, I want to go and ask the chat here, and this is a little bit of a tradition on Walks on Wall Street. Now, we have viewers from all over the United States. We have viewers from all over the world. What is the price of a gallon of gas in your neck of the woods? So if you want to put it in the chat, let's say if you're in North Dakota, right? Bismarck, North Dakota, or whatever, if you're in Miami, Florida, put the name of the town that you're in and put the price per gallon of gas. You know, and also let us know, are you seeing those prices increase? Are you seeing those prices decrease? Because if we look at crude and we follow crude and use crude oil or crude oil futures as a leading indicator, well, I think those prices are going to go up. Tech Guy says it's $3.69 by me. Wow, it's almost $4. Rich Child 9 says $3.80. Al Baker says $3.75 in Hollywood, Florida. Wow. NBA Elias says Tom paid $5.35 yesterday in Cupertino. Wow. I think you probably have the highest out of all of us. Stormy says $3.25 in Norman, Oklahoma. Wendy England says $7.40 in Vancouver, British Columbia. Oh my God. Greg says Madison, Wisconsin, $3.53. Ken Brockton, $3.66 in Detroit, Michigan. Wow. Hawaii, that's pretty expensive too. Ryan Royal says Tom, $3.29 in Tennessee. Eyeglass Lady says $4.79 in Rising. Wow. Vivian says $3.70. JM says San Diego, California is $5.20. Oh man, the wind is really, really picking up now. You can see all the garbage. You know, oftentimes in New York, when it gets really windy, we have these garbage tornadoes, as you can sort of see. But you know, if gasoline continues to go up, or if crude oil continues to go up here, that means it's very possible in places like Cupertino you could see $7 a gallon gas, which I don't know how people are going to do that. I don't think people will be able to survive a second wave of inflation. I really don't think so. Yeah, hang with Mark Mom says, hence this is why we're moving for the Toyota RAV4 hybrid now. You know, hang with Mark Mom, I don't blame you. You know, with the potential trajectory of the price of gasoline and crude oil, especially with the escalating war in Ukraine, I wouldn't be surprised if we see, you know, $6 to $7 a gallon gas in places like California. I wouldn't be surprised. Now, everybody, we are now looking at the New Yorker Hotel. This is a very famous hotel right here on the corner of 8th Avenue and 34th Street. Now, I think the top 5 floors of the New Yorker Hotel are actually dedicated towards the City University of New York as their dormitories. Now, as you know, the City University of New York, or CUNY, is a big college education system here in New York. That's actually where I went to college, right, in the CUNY system. And it's not really the typical college experience that you'd expect. Right, I think the vast majority of people here, when you think of college, you think of big campuses, you know, big dormitories, everybody hanging out. It's not like that in New York. You know, if you go to Baruch, if you go to John Jay, City College, Hunter, pretty much all the people who go there, oh man, that wind is killer, man. Pretty much all the people who go to those institutions live in and around the tri-state area, and they just commute. So it's just, you go to class and then you go home. You go to class, you go home. There's really no campus. It's just one big skyscraper. But over the years, there's been so much demand from out-of-state students that they actually made dormitories, and it's located right here. Hey, Out and About is here. Good to see you. Yeah, if you guys could just see how windy it is, look at the sign shaking right here. That's a big, you know, probably 100-pound pole blowing in the wind. It is ridiculously windy out tonight. And it's getting cold too, getting really, really cold. Mike S. is 4 years of, oh, I thought you said Penn State. I read that as Penn State, not State Penn. Hilarious. All right, and what you're looking at now is the beautiful Moynihan Train Hall. Now, I wanted to take you guys to the Hudson Yards, but I think it's just too windy for that. I think we may get blown away. But look at how gorgeous the architecture is here. This is really beautiful. This actually used to be a post office before they converted it into the brand new Moynihan train station. If you look directly behind the Moynihan Train Hall, this is the Hudson Yards. Now, I believe KPMG, which is the big consulting firm, has now moved their location away from the east side of Manhattan and are now inside the Hudson Yards. Now, we did get some big breaking news out of the consulting world. Did anybody hear this? Big breaking news that dropped via Bloomberg today. And EY, which is another major consulting firm, so you think of EY, KPMG, and the like, you know, McKinsey, they're laying off 3,000 people. So 3,000 employees will lose their jobs at EY. And I don't think that this is the end of it. I think you're going to continue to see this at more and more consulting firms. I think you're going to start to see this news roll out for KPMG, and you're going to start to see it roll out again at a lot of the major Wall Street investment banks, in my view, personally. And the reason why I think this is due to a fact of something we've been talking about for a long time on this live stream. And the thing is, when you start to have that margin compression and earnings erosion, right? We spent probably the first 20 minutes of this live stream talking about margin compression as it relates to Tesla, right? We're going to find out more in detail on Wednesday when they report earnings, but it's not just exclusive to Tesla. This is pretty much every single company in the United States, with some exclusions, that are going to be suffering from margin compression and a decline in earnings. And when that happens, shareholders get very upset because shareholders don't like to lose money. So one of the first things that companies do in order to rein in costs is they unfortunately lay off employees. And I think you saw the first round of that with these big tech layoffs, right? From Meta, from Amazon to Microsoft. And I think now you're going to start to see that bleed over into Wall Street and bleed over into the management consulting world. So I know we touched on it really quick yesterday. Here's Billy Joel, by the way. We are now at Madison Square Garden. We always like to pay a visit to our friend Billy Joel right here. He says Madison Square Garden is the center of the universe as far as I'm concerned. I would agree, Billy Joel. Indeed it is. Now, I want to know from you guys at your work, or maybe you have a son or a daughter that works, maybe nieces and nephews, cousins, aunts, uncles, friends, neighbors. What are you hearing? What are you seeing? Are people afraid of losing their jobs right now? Are you hearing from your boss that they could potentially reduce headcount right now? And what industry are you guys working in? I think it'll be interesting to see the different responses. Now, if it were me, if I had to guess, I think healthcare is probably going to hold up very, very well, in my view. Hey, RJ is here. What's up, RJ? Good to see you. Using People says, what is the purpose of having Scrum Masters and Project Managers? They are all fluff jobs. You should follow Peter Saddington on Twitter. Very good Twitter account. Stacy S is education, and there aren't enough teachers. Yeah, I heard about that. There's a shortage of teachers, but I also kind of see why, right? Teachers have to put up with a lot of nonsense, man. GGMYC says healthcare is pretty safe, but who knows? It's true. Hang with Mark Mom says a family in healthcare and technology here, no fear of being laid off. Bree Graham says, Tom, I'm a paralegal and job growth is very steady. Laura M says, Merck just bought. Yeah, I saw that. I saw that on Mad Money tonight, Laura. Very interesting acquisition. I did see that. Hang with Mark Mom says, I was in finance, but I'm retired now. Very cool. Thurland Smith says, lots of welding work. Be a shipbuilder. You know, I think you're going to see a very, very big opportunity present itself, and it's already starting to present itself now, for learning a specific trade, right? That could be a welder, it could be an HVAC mechanic, it could be an electrician, because I'm starting to get to know and network with a lot of big real estate developers in New York, and very big property managers in New York City. And I will tell you this, skilled laborers are in such high demand right now. And at some of the major property managers that I know, you know, they've been waiting months to get different work done as it relates to HVAC, as it relates to electrical work. It is in such short supply. So maybe if you're coming out of college, or maybe if you're in high school, if you're listening to this, I think there's a huge opportunity here, guys, to learn a skilled trade and start your own small business around that trade. And you'd be surprised if you have business acumen and you can hire a killer sales team, right? And you build out a technology infrastructure, right? You're using a CRM, you're making calls, you know, you're updating and you're managing your clients in the 30, 60, 90 funnel in your CRM. You're sending out email prospecting. You know, you're sending out mailers. You're, you know, hammering it on social media. I think you could start a very, very successful and thriving HVAC company. You know, maybe even just some welding work, or even just a small electrical contractor. You'd be very surprised with how fast you could probably scale that business over the next couple of years, because all of that work is in such short supply and there's such high demand for all of that work. Anybody agree or disagree with that? Or maybe we actually have some skilled tradesmen or skilled tradeswomen in the chat that could maybe provide some additional context there. But I think there could be a pretty decent opportunity there. All right, I want to show you guys the brand new front of Penn Station. Check this out. Felipe says, I definitely agree. Wendy England says, I agree. Ryan Royal says, Tom, roofers. Many roofers are booked solid year in advance. That's another thing, right? Maybe learn to be a roofer. L. Norman says, is it also because it's not easy to be automated away by AI? That's a very good point. Now, AI, artificial intelligence, machine learning, it's very easy to automate away sort of mundane office jobs, right? Clerical work, things like that, finance jobs. But you can't really build an AI or a robot that can do duct work in an HVAC system, right? That could, rewire a whole apartment complex with new electrical wiring. So that's a really good point. That's a really, really good point. Raw Green Tea. This is electricians, fabrication, flooring, roofing, all doing exceptional. You know, I'm actually thinking about, I was talking with a couple friends. We were actually thinking about purchasing a small business, because you got to understand something. There's a ton of small businesses in the United States. I'm trying to think about which block we should walk down to get out of the wind. It's just so windy. There's a ton of small businesses in the United States right now that are electricians, electrical contractors, HVAC, and the owners are starting to get to that retirement age where they want to call it quits. Now, here's the problem. Usually those businesses get passed down in the family, right, through generation to generation. But now everybody wants to be the next Mark Zuckerberg. Everybody wants to be a big tech CEO. Everybody wants to be the next big hedge fund manager, big Wall Street guy. And not a lot of kids are interested in taking over those businesses. So there's going to be a couple things that happen. Well, obviously, number one, those businesses will just close shop, and you're going to have almost like a monopoly in the space with these huge contractors, getting all the business. Or they'll probably be sold to entrepreneurs that could really, do wonders for that business. And I'll give you guys a quick example, because I was in tech sales for many years. I was very successful in tech sales. And I think many of you would be very surprised with how many successful small businesses there are that do millions of dollars in revenue every year, that could double or triple their revenue if they just migrated to the cloud and knew how to sell. So what do I mean by that? Well, I used to deal with a lot of contractors on Long Island, a lot of electrical contractors, HVAC guys that, made $1 million a year. And if they, converted their leads into electronic CRM like Salesforce, Zoho, HubSpot, something like that, instead of just using literally their Rolodexes are still on their desk. It's kind of crazy to think about, but it's true. They could probably double their revenue, because there's no follow-up. They're not following up with the customers. They're not sending out emails. They're not making cold calls. So they're not prospecting. So the only business they get is just the business that they've had for many years, and they're still making millions. So I think there's going to be a pretty big opportunity for people that want to learn a skilled trade, who may have some business acumen, that can go in and purchase these small businesses with already an existing book of business, convert all of those hard leads into a specific CRM, maybe hire 1 or 2 salespeople, a couple, project managers, and do constant outreach to these people and businesses. And I think you could easily double, if not triple, the revenue within 5 to 10 years. I think it could be I think it could be a pretty big opportunity. All right, so guys, we are now walking to Koreatown. This is 6th Avenue. This is actually where I got the PATH train today, by the way, 33rd Street. I gotta give the PATH 2 thumbs up. It is so clean, in quite stark contrast to the New York City subway. The PATH train is just like a whole other world. It is very clean. Hey, Thurland Smith says if you go into a remote area, camp work in Canada, lots of money. L. Norman says agree and also provide apprenticeship to young people who may not have attended college, maybe get some sort of certificate, perhaps. I mean, I think just in general, if you look at successful people, they all tend to do the same thing. They tend to build a talent stack, right? They tend to learn fundamental skills that are transferable in the marketplace, right? I mean, just think about the most successful people in your life. They're probably very high educated and high skilled individuals that have some sort of a skill that they can trade in the marketplace for currency, right? Maybe you're an extremely skilled software engineer. Maybe you're very skilled in one of these trades that we were talking about today. So I do believe that you are paid in direct proportion to the skills you bring to the marketplace. And the more coveted your skills, the better your talent stack, and the more pronunciated your expertise is, I think the higher, earning potential you can have. So I think it's a really good point. We might as well take a walk through Koreatown, guys. What do you think? We haven't been to Koreatown in a long, long time on the stream. Hey, Will is here. Says Tom, currently working for one of the big 4 in audit. I am definitely not afraid of losing my job. However, I have heard through the ether that the consulting of the big 4 will have layoffs this summer. Well, that's good news. I mean, you never want to hear of anybody getting laid off, right? I mean, unless you're some sort of a sociopath. So that's actually good news. I don't want anybody to be laid off. When I report on this news, I'm just giving the news. I'm not like jumping up and down saying, yeah, all these people at EY are getting laid off. This is fantastic. So that's good news, right? So we have somebody in the chat who works for one of the big 4 consulting firms in audit that is giving us some on-the-street data here, right? This is one of the reasons why I love doing these live streams. Honestly, think about what we're doing here, right? We have a collective of individuals from multiple different industries giving us real-time live data. I mean, that's significant. That's worth something, right? Especially if you're, managing money off the back of that data. That's pretty significant. So I appreciate you sharing that with us. Hey, Melissa 2087 is here. Good to see you. Welcome to New York City's Koreatown. I'm quite surprised, everybody. Koreatown is usually absolutely packed, although I do think that the vast majority of the college students are now back from spring break. Is that correct? Is that right? Spring break is over for the vast majority of colleges. So I think that's why you're seeing places like Koreatown, which is a big hotspot for partying, having a good time, going out. I think that's why it's pretty empty today. Even though on a Monday night, you'd be surprised, usually it's pretty packed. But tonight it's actually quite dead. There's almost nobody here. Using People says, Tom, did you get around to trying the Celsius energy drink? Yes. So Celsius is a publicly traded company, I believe out of Boca Raton, Florida. Is that correct? So Celsius is this energy drink that has really exploded in popularity over the past couple of months. I tried it. I'm just not a big energy drink drinker. I mean, it was all right, but would I buy it again? Probably not. I'm a coffee guy. I drink coffee. I mean, you guys know me. I would rather spend the money, if I'm going to go and spend the money on a drink to get me caffeinated to keep me awake, I'd rather just go for a cup of coffee. I don't know, any thoughts there? Because Celsius is another stock that has been performing really well. That's why we were talking about it. I think we actually dedicated a live stream to, breaking down a specific case study as it relates to this company, Celsius, because there's a lot of analysts on Wall Street right now that are assuming the growth trajectory of this company, Celsius, to the growth trajectory of the company Monster. Now, you'd be surprised when I say this, but one of the best performing stocks in history, okay, not of the last 10 years, but in history, has been Monster Beverage. I think all time, the stock is up 16,000%. Okay, so if you think about, and this is what a lot of analysts do, right? They take companies that show similar growth trajectories to mature companies, and they try to pin a valuation on it. And I'll give you a couple of examples here. Well, one of them that we were talking about is Monster Beverage, right? You're sort of seeing, this trend take off with people buying the Celsius energy drinks. I do think it is a Boca Raton, Florida company. But number two, another company that everybody is watching, talking about coffee, is Dutch Brothers Coffee. The stock trades under the ticker symbol BROS, Bros. And many people are trying to model the growth trajectory of Dutch Brothers Coffee to that of Starbucks. Now, has anybody in the chat here ever been to a Dutch Bros Coffee? I've never personally been to one. There's none in New York, but I think they're pretty big in the Midwest and in the Pacific Northwest. Anybody here been to Dutch Brothers? Thumbs up, thumbs down on that. Using People says, Tom, I buy Celsius energy drinks because it doesn't have any artificial sugar substitutes compared to Monster and Rockstar. Yeah, I think that's why it's really boomed in popularity, right? I think a lot of people are starting to prioritize health a lot more. And if you look at the ingredients in some of those energy drinks like Monster, like Using People was saying, it's pretty much all sugar, right? It's a lot of sugar. So it's a good point. Mark says, nope, haven't been there. Ren 10 says, yes, I've been there. Hey, Tariq Khan, good to see you, my friend. Melissa 2087 says, never been to Dutch Brothers. Ren 10 says, it's sugary coffee drinks which taste good. Vivian says, I use caution when having energy drinks. They can affect the heart. I agree with that, and that's why I stick to coffee. But look, we'll watch it. Dutch Brothers, I don't own the stock, but I'm watching the stock. It just went public, I think, a year and a half ago. Again, it trades under the ticker symbol BROS. Does anybody want to put in the chat the ticker symbol to Celsius? I think it's CHLE, I think. I'm not sure, but I think. All right, everybody, real quick. What you were looking at now is one of the greatest views of the Empire State Building you're ever going to see in your life. Okay, if you want to see it in person, you could come to 5th Avenue on the corner of East 23rd Street, East 32nd Street. If you guys haven't noticed, I always tend to mix the numbers up. That's my dyslexia. But East 32nd Street, right here in Koreatown, you have beautiful views of the Empire State Building. And assuming it's a Friday, Saturday, or Sunday night, this area is usually packed. You have a lot of good Korean barbecue places like the one right in front of us, Love. But the best Korean barbecue spot in the city, in my opinion, is actually right here next door. It's called Baekjeong. It's very expensive, but I think it is worth it, especially if you're going here for some sort of a team outing or something like that. This is probably the best Korean barbecue spot. Hey, Lupe. There we go. Love that. Good to see you. Thurland says, invest in oil and gas before Conservative gets elected in Canada. Interesting. Using People says, why would health insurance companies such as Aetna not tell you that they changed your health insurance plan? I don't know. I actually don't think that's legal. I think they actually have to tell you the health insurance if they change it. All right, since we're here, We haven't been to 31st Street in a while. I'll take you guys down to 31st. There's two other Korean barbecue places that are fantastic here. One of which is Take 31, and then the other one is Her Name is Han. Two very, very good spots right in the heart of Koreatown. Hey Lupe, this is Tom. How was work today? Thank you for always spending so much time with us. I learned so much. Yeah, I mean, I love doing the live stream. It's like a part of my daily routine. It's fantastic. But today was very good. There's a lot of big things in the works. And I always repeat this because when I was in college, I always used to consume and binge watch a lot of YouTube videos from Warren Buffett, Bill Ackman, Stanley Druckenmiller, all the greats. And they say the time to make really, really big, drastic bets and big, drastic moves in your life is during times of economic turmoil and economic downturn, which is one that we're going through right now, right? Depending on who you ask. So there's a lot of big things in the works, and I'm really excited about it. Hopefully I'll be able to share that with you guys relatively soon. But I've been able to meet a lot of really amazing, very interesting people. Many of which maybe you guys know, maybe you don't. But yeah, it's awesome. I was in Jersey City, New Jersey today at a real estate conference. It was a very good networking opportunity. A lot of big property managers, developers were there, as well as brokers. So I got to get a good reading about the market. Obviously, as you guys know, if you've been watching the stream, I think there's going to be some pretty big opportunities here in commercial real estate specifically over the next couple of years as a lot of these big deals go south. But more importantly, let's talk about these two Korean restaurants. This one is called Take 31. You guys know this is my favorite Korean restaurant in all of New York City. It's here on 31st Street, in between 5th Avenue and Madison Avenue. But the one right here is called Her Name is Han. And I think they're the same owner. Maybe I'll try to show you guys a menu. Let me see. Let's see if they have a menu out. It's really good. Now, here's the thing though. If you want to eat here, I think you have to make the reservation well in advance. It is a bit expensive, but trust me, this is a Walks on Wall Street. This is actually what I get right here. Pork belly in the rice wrap. 26 bucks, but I can tell you it is fantastic. And I also get one other thing. Let me see. I think I get the beef bulgogi, I think. Anyway, you guys get the picture. This place is fantastic. It's called Take 31. If you're gonna visit New York, either come here or come here. Her Name is Han. Very, very good. Now, you gotta make a reservation, I'm telling you. You can't just walk in here. Although it did look pretty empty in there today, which is actually kind of weird. It's usually always packed. But yeah, if you come here, those are my go-to places, guys. Those are my go-to. Zachary Woods' bibimbap is my favorite Korean dish. That's good too. I've had that multiple times. I've had that. It is very good. Here's the office, guys. Does this look familiar? I think you guys have probably been watching this stream long enough to remember that this is one of the offices that we work out of right here. 135 Madison. It is a WeWork office. Now, WeWork is a publicly traded company. I think it trades for 70 cents. Could somebody confirm that? I think the last time I checked the stock price of WeWork, it was trading for under $1. I think it was like 70 cents. 70 cents a share. Man, what a disaster. Yes, somebody says kimchi sige. I think that stands for kimchi stew. I think that's what it translates to. You know, I think the Korean KOSPI, I think that is the Korean stock market, what it's called. Now, I think tomorrow, everybody, obviously Tuesday, I do want to review a little bit about Mexico. We're going to be talking about the Mexican stock market, Mexican equities, and a potential bull thesis for the US, Canada, and Mexico combined as it relates to population growth. I think a lot of people are going to be stuck on the wrong side of the trade here. And I don't want to give too much away because I really want to talk about this tomorrow in depth. But I will say this. Let me say this. And I know many of you are going to disagree with me, and that's fine. We could talk about it. But there's all of this talk about how China and Russia are going to be the new two superpowers, and it's going to dethrone the United States. And everybody's going to move off the United States dollar, and they're going to use the Chinese currency, the Chinese yuan. And the US dollar will no longer be the world's reserve currency. Well, I disagree with that respectfully. And the reason why I disagree with that narrative, and my narrative is that the United States will continue to be the world's dominant superpower and the world leader well into the future, probably throughout my entire lifetime, is due to population growth and due to immigration. Now, immigration is really, really helping not only the United States, but also Canada and Mexico. I want to show you guys a couple research reports that one of my really good friends had sent me. One of my friends is a quantitative at a very notable hedge fund shop here, where they do really interesting predictive modeling and analysis, and he sometimes sends me some of his research, and really mind-blowing stuff. So I don't want to give everything away tonight. We're going to talk about it tomorrow and the next day. But yeah, I think just the key there, I'll give you guys a little hint, is I think countries around the world, specifically Russia, specifically Japan and China, are going to have very, very big problems in terms of population decline, outright population decline. And that is not good for a growth driver of economic output and GDP growth. Let's just say that. And even though it is true that in the United States, you know, millennials and Gen Z are not having children at the same rate, let's say the boomers and the Gen Xers were having children. But where we benefit is we have really, really strong net migration, right? Generally speaking, everybody wants to come here. You know, just look at the percentage of people who revoke their US citizenship every year. It's almost negligible. It's literally almost nobody, right? While at the same time, we have all of the best, the brightest, and smartest people from all over the world that want to come to the United States to build businesses, to be entrepreneurs, to try to set a better life for themselves and for their families. And I think that's going to continue, and it's not only going to continue, it's going to accelerate. So we'll talk about that tomorrow. Hey, Ben Cunningham is here. What's up? Says China economy is falling, hence why they're forcing their people to keep money in circulation. Oh man, I really want, maybe we should make this a 3-hour stream tonight. I can't do it. I gotta get home. I'm telling you, let's all do some diligence here, and we'll report back tomorrow. And that, we're really going to talk about that. But I'm very optimistic for the future. I think this economic downturn is going to create just unbelievable earth shaker. Oh, here's the Starbucks, by the way. We were just talking about Starbucks, Howard Schultz's company. Actually, no longer. Howard Schultz is the co-CEO, I think, all the way up until the end of the year. And then I think it's the other gentleman from KPMG. Anyway. But again, guys, I'm telling you, I'm telling you, out of this downturn, okay, and we will get through this downturn. It may get worse before it gets better, but the opportunity is going to be so freaking massive that it's just going to shake you to your core. It's just, I mean, if you could stay in the game, focus, okay, when everybody else is talking about, you know, get out of cities and, you know, buy your MREs and your canned beans and live in a cabin in the woods because society is going to self-destruct. I don't want to live in a cabin in the woods and, you know, sit on the floor in my bunker and eat MREs and canned food. I want to succeed. I want to help America continue to explode in popularity for people all over the world. I want to be a part of the capitalistic boom that is the United States of America. And I'm telling you guys, in the next 10 years, it's you guys, if you're steadfast, if you do the right things, okay, if you stay involved in the game, right? Everybody wants to be involved in the game when stocks are hitting all-time record highs, when home prices are going gangbusters, but nobody wants to stay involved when stock prices are depressed, when people are losing their jobs, when home values are getting crushed. That's when everybody wants to run for the exits. But that's when you need to double down, if not triple down, and you need to focus, and you need to become a professional operator in that environment. And I'm telling you, you guys will be rewarded, okay? So stay steadfast. This is the time for you to build your skills, okay? Focus all of your energy on building marketable skills, okay? Building your talent stack, and aggressively pursue market share in this environment, okay? When everybody else is trying to be afraid and, you know, hide under their covers and buy MREs and canned food. I'm not saying you shouldn't be prepared, you should, but that's no way to live life, is just to sit in your little bunker and eat baked beans all day, okay? You could have the baked beans for a nuclear fallout event if that happens, but you guys gotta stay in the game. Don't quit. Don't listen to all the fear porn, okay? That's on Fox News and CNN. Be optimistic always, and I think you guys are gonna kill it. And with that being said, team, I do want to wish you farewell. All but for a couple hours. We will see you back here live from New York City. 8:30 p.m. we will be talking about US, Canada, and Mexico. Maybe we'll touch on Tesla a little bit more. Once again, if you want to look at the resources from tonight's live stream, you could type !HSI. I think that was the Nightbot command, or HMI, excuse me, in the chat. That'll drop the National Association of Home Builders Housing Market Index that we talked about today. We also talked about individual home builder stocks. We talked about Charles Schwab's earnings. We talked about Tesla. We talked about layoffs in management consulting, and we talked about the big bid that is happening in crude oil. So sunshine after rain, thank you so much. Jenny Trickett, Mike Skate TV, appreciate you. If you guys are new here, feel free to leave a like on the video and click the subscribe button if you're new. If you want to sign up for our free investing newsletter, click the links in the description and join us over there. ATC, Steph UH, Dr. Longest, Jafet, Mohammed ATC, thank you so much. Hang with Mark Mom, UniJ23, Cindy Foley, Mark Davis from Canada, Sally, and to the Mighty Bull, have a good night wherever you are, because there is always a bull market somewhere, and you just need to know where to look. I'll see you guys tomorrow. Take care.